Coming into today, we had basically this tight channel from overnight, and during the start of the U.S. session, we had that strong upside breakout testing the Globex high. And because of all this trading range price action that we've had for several months, I thought it was reasonable to expect that whatever breakout we got would probably be limited, and that we'd probably end up pulling back. And on the 5-minute chart, we ended up gapping up on the open, and we formed a relatively decent bull bar, closing on its high. Strong enough bull bar, strong enough follow through consecutive bars. That made me think there's increased risk that we'd probably find buyers below, and we'd probably get some sort of minor reversal, maybe test the one high. And you can see what happened. We came really close to the one high. Why did we test the one high? It was reasonable to think that because of the consecutive bull bars, it was reasonable to think that we would probably end up finding buyers in this area and getting some kind of second leg. Then we got a second leg up on the 4. We have 4 consecutive. We have 4-bar micro channel with 3 out of the 4 bars closing on their highs. That's strong enough to make me think we'll probably go higher. Another follow through bar, good for the bulls, probably going to go higher, probably by the close. Same thing with 6, probably by the close. And then 7, same thing, by the close. But at this point, we're getting relatively far from the moving average. And because of that, because it's relatively far from the moving average, that makes me think that we're probably going to pull back and get some kind of second leg. 9, doji, but still probably buyers below. At this point, when you get a buy the close rally and you start to get dojis, odds are you're probably going to end up getting a pullback fairly soon. Why is that? Because a lot of traders aren't going to be all that thrilled to buy closes when the energy is lacking. And then 9, I said say 8, 9 bull bar closing on its high. Probably go a little bit higher, but whenever you get a doji and a buy the close rally, usually the market will pull back to the doji within a bar or two. And then outside bar 10, some more disappointment. What about selling? I would not sell when the market looks like this. And then we got another push up on 11. That's good for the bulls. And then 12, a bull bar. And then 13, doji. At this point, we're so far from the moving average and we're just so climactic. Odds are we're going to pull back. 14, bear bar. Not a great sell. Probably buyers below 13. But I expect there's sellers in the upper third of 14 and we may go sideways. I think we'll probably have to pull back to the moving average. What I don't know is if we'll go straight down to the moving average or if the moving average will get dragged up. This looks fairly climactic. That's a little bit of a problem for the bulls. 15 consecutive bear bars, 14 and 15. That's good for the bears. It makes me think that we're probably going to go at least a little bit lower. Then we got that surprise on 16. 3 consecutive bear bars. I suspect sellers on whatever reversal up we get in the second leg down. Bull bar, not a great buy price. Sellers not far above 18. Second leg down after the 3 bear bars. That's good for the bears, but at support, probably going to get a bounce. And then we bounced briefly, testing the 11 low and found sellers. 19 breakout pullback sell, good for the bears. But let's see if we can break below the moving average. As far as buying below a 19, I would not. Outside bar closing on its low, strong enough. 15 and 16 will probably need a second leg. And then 20, doji, not a great buy above. And then 21, follow through, good for the bears. Looks like it may go a little bit lower. Then we got the doji, 22, but still not a great buy. And then 23, bear bar, 24, bears giving up, bulls selling. A little bit of a breakout below a wedge. So 24 might be strong enough for a second leg down. But you're getting in that area where there's probably going to be buyers fairly soon. 25, follow through, good for the bears, but sell climax, pause, second leg down, or you can say sell climax. And then a second sell climax, and then a third sell climax. You can also say it's a bear breakout below a channel, but at this point, I think probably more buyers down here than sellers. Strong enough consecutive bear bars, 24, 25. Probably first low is going to be minor. 26 bull bar, probably sellers not far above. And then 27 doji, not a great sell below, but I suspect it's not a great buy above. And then doji 28 and 29 bears trying to go lower. 30 looks like they're getting a small second leg down after 24 and 25. I still think bottom of this overall trading range, downside risk is probably limited. And then 31, we have a bull bar. That's good for the bulls. Probably going to bounce. And then 32, follow through. I still think buyers below and more sideways. 33, I talked about it. It's a low one. You call it a double top, 27, 33. You can sell it, but it's fairly low in the range. And that lowers the probability for traders selling in this overall direction increase the risk of buyers in where we are. 34 bull bar makes me think that the downside is probably limited, and we're probably going to go sideways and eventually reverse up. And then 35 consecutive bull bars, 34, 35. Good for the bulls. Makes me think buyers and I know at least a little bit higher. I mentioned that traders who bought up here, scaling and lower, probably will be able to avoid a loss. I think we're going to go somewhere up here. Then we got another bull bar, 36 breaking out above the moving average. That's good for the bulls. Increases the odds that we're going to go higher. And that makes me think that traders still buy, looking for some kind of second leg up. And then 37 consecutive bull bars, 36, 37. Good for the bulls. Makes me think that we're probably going to go at least a little bit higher. And then 38 pulling back, but I suspect buyers in a second leg up. 39 a bull bar. The bears 38. That is really me. That's not enough. The bears really should have done more if they're going to get a reversal down. And with 39 forming a bull bar, makes me think we're going to get a second leg up and test back to this area where the break-even price for the bulls who bought up here and bought more lower. And we started to get the type bull channel. 43, I mentioned it was a bull breakout, climactic, but then 44 got followed through, so I thought we'd go at least a little bit higher. Bear bar 45, not a great sell, buyers below. And then 46, we have a second leg up, good for the bulls. And then 48, bear bar. It's okay to get out of longs below 48. It's a micro channel consecutive buy climaxes, probably going to go sideways to down. Then we start to get a series of bear bars down, and that's good for the bears. But with all the overlapping bars and testing prior areas where bears got trapped, bears selling the 39 high, hoping for a second leg down after 38, they got trapped. And look where you are. You're basically right back to that price level. And that increases the risk that 51 or 52 may get a bounce. And then 52, we have a bull bar, good for the bulls. Probably the first love is going to be minor after this many bars down. And then we got a doji, more sideways, 54. We tried to break the downside on 55, but we failed. And 55 reverse up, 55 second entry buy. And what about buying it? Some will, but middle of a tight trading range, low probability. 56, we have a bear bar, good for the bears, but let's see the follow through. And now obviously you can see what happened. You had traders selling the low 153, scaling in higher, selling more on the low 257, making money. And I thought 57 was a strong enough bar that we'd probably try to get a little bit higher, but buying and selling with stop orders in the middle of a tight trading range is low probability. Then we got the bear bar 58. If the bears are going to get the downside breakup, we'll do it. One of the problems here, every time you take a stop order for the sells, it's forcing you to sell above the moving average, right at the moving average here, above the moving average. And the moving average is right below the low of the bar. That's low probability. We broke below the stop order 58 on 59, but instead of finding sellers, we reversed up on 60. I thought 60 was a strong enough bull bar at this point. We've had so many bars back and forth, and we're probably going to try and test up to the 47 high. And then we got followed through 60, 61, good for the bulls. Makes me think buyers below in a second leg up. 62, 3 consecutive bull bars. I still think buyers below. And then obviously we rallied, forming a fairly tight bull channel. 68, we have a bull breakout closing on its high, testing the moving average here. To me, that's mission accomplished for the bulls. I talked for a while about the bulls. You had bulls who bought in this area and they got trapped. And therefore traders would see this as an overall magnet and a resistance level for the market to test. When the market reached that location, the market ended up going mostly sideways. And then you can see that's pretty much what happened. We started going sideways in a tight trading range. And then ultimately, we closed around this area. For stop orders, I thought you could buy above 1, you can buy above 2. You can buy above any of these bars. But at some point, after 9, especially when you see the doji 8 and the doji 10, you got to start to think that the upside is probably limited. 15, 16, traders selling below 15, selling below 16, probably going to get a second leg down. Even selling below 19 is probably okay. But it gets a little bit dangerous at this point because you're right around the midpoint of the rally. And at some point, there's going to be buyers not far below. Bears, if they're short on 19, I suspect they probably get out above 31, and then bulls can buy 31, they can buy 32, 34. Bulls, if they're long, where do they get out? I don't think they have to get out on 38. Some might get out on 47 or 48, but I suspect that, realistically, I don't think they have to. Downside is probably limited at that point. Price just went sideways in here. 60, bull bar closing on its high. Then we got followed through buying 60, 61, 62, 63. You can buy above any of those bars, and then that's pretty much it for the rest of the day. And then limit orders, and you can buy below 9. And at this point, I would not buy below bars. I think it's fairly dangerous with how climactic it is. I thought sellers above 18. I thought buyers below 27, buyers below 29 for a bounce, buyers below 33 even. I thought buyers below 37, even though it's a little aggressive, it makes sense. And, I thought this was tricky. I mentioned over here, you have you have two magnets. You have the low of 39, then you also have the high of the 53 area. And you have the low of 39, high of 47. That makes me think that we're probably going to end up being mostly sideways. As far as other limit orders, maybe selling the close of 68 during 71 on a retest during 71 is probably okay. And that's probably it for limit orders. Buy the close, sell the close. You can probably buy the close at 2. You can buy the close at 3, betting on a second leg. Buy the close 4, 5, 6, 7. Even buy the close 8. But at that point, I think it's better to look to take profits above. Can you sell the close of 16? You can. I'd rather sell a pullback and see what the reversal up looks like, because you never know. But with consecutive bear bars 15 and 16, odds are 17 is not going to be a strong bull reversal. And even if 17 does reverse up sharply, odds are if it rallies, it'll probably test back to the 16 close at a minimum. And then 24, 25, if anything, I'd be looking to, maybe you can sell. You probably, I forgot the limit order. If you're selling, if you want to sell down here, I think it's better to sell above a bar for a scalp, because otherwise, once the market starts to go sideways, it's better to look to buy. But as far as buying closes, I don't know, maybe 66, 67, or the pullback 68. If you're really aggressive, and then I thought it was probably okay to buy closes on 62, 63, 64 for at least a small second leg up. Let me take a look. And then as far as where do we go tomorrow? I don't know. I think we'll probably have something disappointing with tomorrow. And we might get follow through, but realistically, we'll probably be sideways. I've mentioned that I think one of two things is going to happen. We're either going to pull back, and I think two things will happen, but I think we'll either pull back and then test up to 7,900 or close to 8,000, or we'll go straight up to this area and then try and pull back. Question, Brad, how'd you know around bar 46 that we would go sideways to down? Is it because it had already formed two legs? Well, that's one logical reason, but I made the comment you had trapped bulls. So if we go back on the recording, I was talking a lot about the traders who ended up buying, those theoretical bulls who bought, around anywhere. They bought the 12 close. They bought more above a bull bar here. And I kept saying, I kind of just picked a number, 7820 area. And I kept saying that 7820 is an logical area of resistance. And because of that, that increases the risk that the market may end up going sideways around that location. Okay, so how'd you know it was going sideways during bars 51 to 56? And then the breakout of the range 57, and then it pulled back and tried to break out again. Was that a sign of energy commitment? So I thought this area was a tight trading range, and I thought the odds were at that point. And one thing that's dangerous is when you get decent bull bars 55, even though the context isn't great, and a bear bar 56 and an outside up bar 57, it's just begging you to take stop order trades and make a bad decision. And you gotta be really careful with that. I thought 57 was outside up, but it was also possible leg 3, leg 1, leg 2, leg 3. And then when 58 was a bear bar closing on its low, part of my concern was that 59 may close on its low. And then I made the comment when 59 was actually selling off on, 58. When 58, I thought it might be a bear bar closing on its low. And when 58 started going down, I made the comment that it's possible that 58 is just a test of the midpoint of 57. Midpoint 13 and a quarter. Look at the low of this bar, 13 and a quarter. So the low of bar 58 was actually the exact midpoint of the previous bar. And I said that it's possible we test down and then quickly rally either on the next bar or during 58 right before the bar closes. In this case, formed a bear bar closing on its low. We tried to get strong follow through, but we found buyers in the bottom third of the range. And then I said this was good for the bears, but the bears need commitment. Otherwise, it's just the bottom of the trading range. And I thought that was a done deal for the bears. 60 is a strong enough bar and enough of a rally here that I thought the upside, there's increased risk we'd try and get some kind of second leg up. Follow through 60, 61, good for the bulls. Buyers below, and then we rallied. But overall, really dangerous environment for stop orders in there. Someone said, what do you see on the 1 minute chart? You say that you see the energy behind the bar. Yeah, the energy behind the bar. I kind of think about it like this. If you crack open the bar, you're going to see how the bar formed. And, what I mean by that is, just at any bar, find the less overlap you have, the stronger the bar is going to be. And the more overlap you have, the weaker the higher time frame bar is going to be. And so what I mean by that is you can sense. If you look at the energy, I'm trying to think of the best way to put this. The energy of the bar is really just what is the formation of the bar. A strong breakout. The reason why, if you think about it, the strongest breakouts are bars that the strongest breakouts cascade into larger breakouts on higher time frames. And the reason that happens is on a 1 minute chart, for example, you get a bull bar closing on its high. And then you get a series of bull bars with little overlap closing on its highs with micro gaps. What that creates is a strong breakout on the 5 minute chart. And then if the 5 minute chart forms a series of breakouts, that creates a strong breakout on the next higher time frame. Let me show an example. We have a situation like this. This is a series of strong bear bars. And because of that, it's a series of strong bear bars. If you think about, we had a trend from the open, and then we've basically formed a lower high major trend reversal. And then this is bar 1. This is that doji right here, or the bear bar. Look at bar 2, big bear bar. Look at the 1 minute chart. There's basically no overlap, and there's strong gaps. And what this creates, this 1 minute chart, what this created on a 5 minute chart was this. And when you basically get no pullbacks and hardly any overlap, you're going to get a lot of trapped traders on the wrong side of the market. And all these traders who bought here, scaling in lower, they got trapped really quickly. I remember this day, and I remember trying to sell a 1 or 2 tick pullback during, I don't remember if it was during this bar or what, but trying to sell 1 or 2 tick pullback and noticing that it's just not pulling back. And at some point, 1 or 2 minutes later, I just had to hit sell the market. I remember thinking to myself, wow, what a terrible time if you were long trying to get out on a bounce. And so that's the whole point of the slide. It's just an example of very strong selling. This is November the 8th of 2022. This is a 1 minute chart, and this is the 5 minute. So this is the 5 minute day, and this is a thumbnail of the 5 minute sell off right here. All right, so overall, I think we're probably going to try to go higher, but we may end up pulling back first. But so far, bulls seem to be in control on the daily chart, and the bears really need to do more than what they've done so far. All right, so thanks everyone, and I hope everyone has a great rest of their day.